Let's put aside the numbers for a second. The general scuttlebutt out there was that one of the biggest impediments to getting the deal done was Bob Bakish himself. Removing him, does that change things?
It definitely does change things, Romain. So now they obviously have the interim triumvirate, if you will, of the three section heads. And this is, again, as you just pointed out, it's just a stopgap. Ultimately, what we're going to look at if the Ellison Skydance Media deal goes through is David Ellison kind of taking over as CEO, and then the former NBC chief, Jeff Shell, taking over as president. So that's kind of the ultimate leadership structure. This is just kind of an interim arrangement here.
Okay, it's an interim arrangement, and I know we say the numbers don't matter all that much, but if you're Skydance and you're looking at these numbers, does this make Paramount more attractive to you or less attractive given the numbers we see? Filmed entertainment revenue, $605 million, beating analyst estimates, but TV revenue, $5.23 billion, missing the average analyst estimate.
The numbers on the whole, Scarlett, are definitely okay. I mean, they're almost slightly better than what we were expecting. The one number that I was kind of looking at was the direct-to-consumer segment. And we were looking here not just at the growth in subscribers, which came in well above estimates at almost 4 million subscribers added in the quarter, but we're also looking at streaming losses. Remember, the new mantra across the media landscape is really profitability. Again, they're not profitable yet at this point, but we were expecting higher losses that came in below 300 million. So that would definitely is a slight positive. And then you had advertising revenue. Of course, you could argue that was a boost from the Super Bowl, but overall, I think the results look pretty decent.
The results look pretty decent. When you think about the new CEO office that they have, these three people who are splitting up the big role, does that give indication that we're going to see a breakup of Paramount into different assets and Skydance or whoever else comes along, whether it's Apollo and Sony or someone else, are going to buy bits and pieces as opposed to buying the whole thing?
So the whole Skydance pitch has been that, first of all, they're going to continue to trade as a public company, with the merger of Skydance into Paramount. And that's exactly what Sherry Redstone kind of wanted. She didn't want, the kind of a yard sale of all the different parts of the company. So with Skydance, I think they will try to keep the entire structure together. Of course, with Apollo and Sony, it's going to be a completely different situation. We know that Sony really is only interested in the content production arm, which is, the TV and the film studio. And of course, Apollo already owns quite a few TV stations, so it would kind of make sense. And Sony can't own them again because of, a foreign ownership with broadcast assets. So again, CBS and some of the stations kind of would go to Apollo. So it's, sorry.
Well, I'm curious, Geetha, though, what is kind of the identity of this company now? Because whenever everyone talks about the value of Paramount and particularly CBS and some of their other properties here, I always hear them referring to kind of almost legacy things, right? I mean, there's no doubt about it. They have a great catalog and have some great licensing. But at the end of the day here, are they producing newer content to the same extent that maybe we're seeing out of Netflix or Disney?
Definitely are producing new content, Romain. We are seeing that, and a lot of the success on their Paramount Plus streaming platform is actually because of all this content that they're producing, whether it's kind of the Taylor Sheridan universe, whether it's, new Star Trek series. They're having quite a good, success rate with that. The question, though, is, and this has kind of been this constant criticism of Bob Bakish as well, is whether they should have even ever made that pivot to streaming in the first place. Because yes, they do have 71 million subscribers. That's not bad at all, but it's come at a big price. They've lost rather $5 billion to date on that service, and they're only going to lose more and more. There's always questions about whether it's going to turn profitable ever.
But how do you do that? Because I mean, I feel like Netflix is going through the same thing, and as I'm sure you know, they've made a big change in their filmmaking strategy, kind of putting a little bit more focus on very specific things. I assume in a way to control those costs here. Would something like that benefit Paramount?
It's going to take a long, long time, Romain. So obviously we know the whole Netflix story. Yes, they were facing a very similar situation, but they have that kind of first mover advantage. So now you're seeing a lot of operating leverage in their model. And with 270 million subscribers, they can spread those costs, obviously, and extract a lot of value. Paramount, unfortunately, cannot do that. You're spending the same amount of money to create a piece of content, whether you have, 5 people watching at 70 million or 270 million. So obviously, scale matters in this business. That's what all of these companies are learning. And it's going to take a long time for the Paramount Plus streaming business to really turn around and be profitable.